Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Slower times ahead. That's the topic I'm going to talk to you about today. When your index makes 8-9% in 1 month, what should you perceive it as? It means that almost a year's return has come in a month. It doesn't mean that the subsequent months are going to build too much on this trend. Yes, a little bit of overflow of sentiment will always be there. After a very frothy month, it's not as if the froth will die down the next day. It will take some time for the froth to die down. So, some overflow will be there. Some of the excesses will spill over to the next month. Some stocks or sectors which did not participate earlier will participate in the next month or the month after. So, all this will happen for a few months. Sometimes the excesses may also repeat for one more month. That is also a remote possibility. When investment flows are such that there is euphoria and everybody wants to pour money into an asset class, you will see that also happen. But even thereafter, the froth will eventually come down, the markets will come back to their senses and gradually return to normalcy. So you will need to slow down. But it's very difficult to slow down when you have a spectacular month like December 2023. As an investment manager, it is very difficult to even tell people this. In fact, most people expect you to tell them that things will be good going forward. It's a very basic expectation. But it is our duty to tell you that things will not be as good as we expect them to be or you expect them to be. Things will always run short of expectations when expectations run way ahead like you've seen in December. But we should not mistake the exuberance that we will see in the following months for a sustainable trend. Because when you see so much of euphoria in 1 month, the subsequent months will also see a spillover effect. And in that spillover effect, a lot of stocks will perform. As they say, first the cats of the market shine, then the dogs of the market bark. So, it's quite likely that the dogs of the market will also do well. You'll see a rally in value stocks which never participated for a long time to come. You will see sectors which were shunned suddenly coming back into fancy for a brief while. But that brief while is enough to trigger a quick bump up in the valuation of these companies. It would appear from that bump up that making money in the market is very easy because stocks run up so fast. But that would be a very mistaken judgment to make in the current market context. If you are well aware of what all these things mean and how you should see them, then the chances of you are making judgmental errors at the market level, at the sentiment level, are lower. It is your duty to avoid the bigger judgmental calls. It is your responsibility to sober down when others are refusing to do so. It is your responsibility to let go of some opportunities which could turn turtle if sentiment reverses. It is your sole focus to be very valuation driven in a frothy market and not worry about non-participation in what is the recent fancy of the market. These are not easy responsibilities to fulfill. but these are responsibilities that you owe yourself. And I hope you respect those responsibilities during these times when everything seems to be running faster, higher, and away from us. Thank you for watching this video.